So the economic survey has been tabled before the Parliament. The biggest highlight of this, it seems, is that the government expects the economy to rebound this fiscal and do far better in the next fiscal. The first 2 quarters of the fiscal actually delivered 6.3 and 6.5% growth. However, the government expects that this full year will deliver 6.75% growth, which is essentially means that the rest of the year, the second half of the year, could deliver upwards of 7 to 7.5% growth. And this trend of higher economic growth, the government expects will continue in fiscal 18-19, when it's expecting between 7 and 7.5% growth for the whole fiscal. The other major highlight of the economic survey from the Chief Economic Advisor is that the government expects the exports to grow at 12%, which is a reversal of the declining export trend that India has been seeing for the past 3 to 4 quarters, which the Chief Economic Advisor said was rather because of the decoupling of the economy due to demonetization and implementation of GST. The other major good news comes on the GST front and the implementation of GST, where the government is saying that the growth in GST collections is about 12%. So GST revenues have grown 12%. And the other interesting thing with reference to GST is that the number of GST registrants is about 50% higher than what the government expected. And now to the 2 major worries that the government has on the economic front. The biggest, of course, is that the crude oil prices are continuing to rise, and every $1 increase in crude oil price actually worsens our current account deficit by $500 million. And that's something to watch out for, because the crude oil price has already crossed $70 in Mumbai. The petrol price has already hit 80 rupees a litre. The second major worry from the government side, it seems, is on the stock market valuation. And the government has highlighted the fact that the stock market valuations are really high and one needs to be extra vigilant as far as the stock markets is concerned. And the Chief Economic Advisor Arvind Subramaniam actually talked about something called the emerging market stalling, which basically means that suddenly the stock market investments stall, and that is something that the government needs to worry about and has to be extra vigilant on. So finally, what is it that the government must do in terms of policy agenda in the coming year? Well, the economic advisor says that the government doesn't have to do anything radical. All it has to do is to ensure that the economic changes that it has brought about are pushed through. For instance, GST is implemented with least disruption as much as possible. The second major thing that he said the government must do is to ensure that the NPA problem is resolved, the twin balance sheet problem from the bank side as well as the corporate side, and the NPAs are resolved under the bankruptcy code. And finally, he said that as long as we can ensure that disinvestment goes through, in this year the government is expected to earn about 90,000 crore from disinvestment. In the coming year, government is expecting 1 lakh crore of disinvestment. He has said that Air India disinvestment must go through, and that will send out a very positive signal.